Okay, guys, I'm going to look at the US 100. Why? Because 12 o'clock today, there's a lot of pound news, so European markets, etc., are going to explode over the course of the next hour or so I want to stay away from it. But also, I'm a good believer in helping those who help you. And in the live call last night, Cliff said that he's looking at the US 100 quite a lot now. And I thought, it's actually come into play. So what I'm going to do is I'm going to show you how to trade it. So if you like that sort of thing, you're into trading, etc., hit subscribe button, turn bell icons on and share this to your friends. I am genuinely grateful for all of the support. And because of that, I'll try and help you. So let's have a quick look at the US 100. Well. First of all, to understand this market, there's no point looking at 5-minute charts and things like that. You actually need to be out on the daily somewhere. Okay, so you can see out on the dailies, drop a few indicators on just so you can see. Look at an average true range. Well, it's doing 350 in a day. So this thing has definitely got some movement in it. It's currently shifting up. As we can see, the indicators are moving down, but this thing's actually moving up. So I actually want to buy this. Now I'm getting ready to just drop an order in, so I'll do that now. Do it through a candle count. Let me just switch them off for a second. So 1, 2, 3, 4, 5. So kind of across that plateau is where I want to be. We're going to put in a half decent order on this thing. Okay, so we're going to be putting an order in. I use pending orders. Across there. It's a bit of a dangerous market, this one. So what I'm going to do is I'm going to kind of go in at half a position to start with. So my order's placed. Oh, just nipped through it, actually. Bugger. Come on, come back and then pick the order up. And we're looking for a good old target on this thing. Move that up to 50 odd pips. Now I'll explain that one in just a second. Okay. There's good reason why I've reduced the position size I would normally go in. This particular market is, there we are, it's picked it up, is very, very brutal. Now the way you compensate that is target's the same, but lower your position size a little bit. Reason being, if this thing runs, I already know it's one of the fastest markets moving. And if it goes for like 100 pips, and it'll do it very quickly, I'll be in a world of pain really quickly. An easy solution is just reduce the position size so it can run. But the money side of it isn't going to be as painful because it is pulling against this particular big move, but it's a 5-minute chart. So let's have a look at this in real terms. So start here. So what we can see, it's now got good key levels. It hadn't for a long time. In fact, those levels were borderline non-existent because it had ran so high. You were dealing with hypotheticals, but now it's got some decent turning points. You can get some levels in. So I've zoned it out so I can see where it is. Now my pain points, if we look at it, is down underneath this green area here and then here. So I've got to weather a big storm if this runs against me, and that also tells me to reduce my position size. Okay. The general consensus of this market is moving to the upper side. And what we're going to do with this is show you where it comes from. So I do a pre-analysis all the time. I work my way through the multiple time frames to get a general consensus of what the market is up to. Now here, the general consensus seems to be buying inside a bull market. Now it's telling me it's a reasonably good buy. Told me to wait, which is why I put a pending order in, but it's clipped me anyway. So I'm not really fussed about being taken into the market because I always dip my toe in and then I build the position up. So I'm not trying to time the market. I'm just trying to get a view of the market. And it's roughly about 49 pips is the target. And that comes from down here based on its ATR that I've just shown you. Okay, so it's all kind of pre-planned and mapped out. So what this is looking at now, see if I had that on my normal position size, the 5 or half a lot, that would be quite painful at this moment in time. But it's not, you know, it's actually quite manageable and it's okay. And if I do 100 quid out of this, I'm fine. I'll live with it. But let's look at the trade a little bit more. Okay, so we're looking at the hourly. I can see a definitive top and a definitive bottom. So what I would do with that is I kind of break that down a little bit as well. And then sure enough, what can we see? Well, you see my entry point is here. So my entry point is aligning with a key Fibonacci. And what I'm doing is, instead of trading into the retracement, I'm trading out of the retracement, which is here. And then the target is kind of halfway between the two. So again, it's about the 50% mark of here. So that's correct. And then I can put extra points in if I wish. So if it's broken down through that area, the next target point would be here. And then finally, the target point would be there. So everything marries up. So the swings, the protections, it's all pre-planned. It's all mapped out. Okay. So once that's in place, needed the direction. Okay. Well, let's look to see what this is telling you. Massive run up. It's come down to around the 50%. There is a hammer, starburst, whatever you want to call these things here. Okay. Showing a rejection of this level as it came down to fill the prior gaps. Okay. So that was there. It's pushed up. It's pushed back down again. Failed in and around the levels. So these are holding true. And then it's starting its move back up. So if that's the case, where's it going? It'll try and come back to here. And it's twofold, because even if that is doing ABC patterns on the way down, this pullback can still push into these regions before it goes back down, or it's following the general consensus of the market, which if you look in your higher time frames, your dailies, etc., it's pushing up. So where's that? Well, there it is there. That's moving up. And it's a general push to the upper side. You've got to be really careful with this, because you get caught in one of them, you know about it. So size down. Okay, we'll come back to the hourly so we can see it. Am I happy with this sort of process? Yes. 15 minute. What about this? Well, 15 minute, pushed up, pushed down. It's double bottomed here. Now it's going back up. You can come back down, retest into this. Not a problem. For it to come back up. So how do I capitalize on that? Well, I assume it's going to go against me. So therefore, I'll stage into it. In other words, I'll put extra orders running down to the point that I'm wrong and then up. Now, some people don't understand that. Some people do. But it works for me, and it's what you see me do pretty much day in, day out. And what it does for me is it reduces exposure, not increases it like some people think, and it increases the upside. It's a very clever way of doing things, but you've got to do it right. If you get it wrong, it can be catastrophic. You know, it can turn into a Martindale system, and that is just ludicrous. This is a DCA system from fixed points. It's one of the three types of DCA that you use. Two of them are pretty good. One of them is fucking terrible. And trust me, Martindale is terrible. And that's the one you avoid. Okay? So, we're now just going to play this out and see what happens. Okay, guys, I've got to go into a meeting now. Well, 10 minutes, but I've got to prepare for it now. And it's going to take me a couple of hours. So what we can see here is it's doing pretty much exactly what I told you it was doing. Hasn't really come down to pick any extra orders up. Not an issue. And we're letting it run up into target. So when I come back, if it's hit it, outstanding. If it hasn't, we'll then continue to manage it. So give me a little while and I'll come back and then I'll kind of explain something to you as well. Okay, catch you in a bit. Lovely to speak to you, Emma. Salute to you. Good chat, and I do hope the ring fencing is going to help you. But let's have a little look, see what's going on with this. So, there isn't anything on the screen. Just check my tickets. Yes, got the tickets off. And there you go. Okay. So, triggered the second entry on the drop back, but then just killed it off because it is the drop back, but it actually made the target. So it went up, came down, picked the second order up and just killed it off because it had an opportunity to do so without worrying about it. Okay. And if I hadn't targeted it correctly, this would have given it all back. So what's the moral of the story here? Planning is key. Planning is absolutely key to what goes on. Now, that trade itself was quite a simple trade, but it also was fraught with danger. Why is that? Because the ATR of the US tech is huge. So therefore, you've got to be careful with it. You know, if you let it get out of hand, it'll really hurt you. And not only will it hurt you, it can probably destroy the account as well. So how do you defend that? Size down. Reduce your position size. Break up that position size as well. So if it does move against you, you're not frightened of it. Now, this is something I touched on with Emma about when you look at a trade, if you're trying to force a narrative, that narrative very rarely plays out because we're dealing with the future. You know, yes, we look at self-fulfilling prophecy, and that is echoes of the past for a vision of the future. But nobody knows what the future is. We can only prepare for it. Now, with this particular market, was I willing to take on a full position? No, I wasn't. Why? Because I would have too much heat to bear if I was wrong. So how do I do that? Well, to allow for the extra sort of payload of sort of loss, I just reduce the position size, which naturally reduces the loss. And then for the money on the top side, well, if it runs for me and I get paid, it's just the byproduct of doing the right job. Oh, talking of byproducts, here she comes. Actually, I shouldn't say byproducts when she's about. That'll be a signal for give us your wallet, you fat git. Well, you do like to buy things, don't you?
You want your sandwich?
Where's mine?
Yours is here.
All right. Look at that, boys and girls. She's giving me a shit. Look, a shit. So I'll give her a shit. There's your shit.
Oh, sorry.
There you go. Have you been out spending?
No, I just went to the shops. Food shops, not exciting shops.
Did you hear that?
Necessity.
What? Necessity?
With food, necessity?
Is it?
Yeah.
There's lots of things that are a necessity.
That's not right.
Yeah, coffee.
Yeah,
because we all know Scruffy likes a coffee. What else have we got a necessity? Have you got us penciled in? Are you penciling us in for later?
I'll pencil you in, yeah.
To do what?
Watch the telly.
It's crap getting old, isn't it? If I said that when she was 18, she'd have had us doing DIY. Anyway, boys and girls, for those of you who have just come to the channel for the first time, this is my beautiful assistant, Winky. Say hello.
Hi.
Right? Now take a good look at that because you'll see her on Crime Watch because she commits fraud on a daily basis.
I do not.
She does. She tricks me into giving her my wallet all the time. And do you know how she does that? She offers me favours. if I buy something and then never does the favours. That's what marriage is all about, youngsters. It's living in perpetual hope.
You're a real sunshine today, aren't you?
No, I'm living in perpetual hope. You know, bloody hell. I mean, trust me, when you get to my age, hope's about all you've got. You know, it's the only thing that lifts my expectations. Anyway, I think I'll have my dinner now.
And your rambler.
Nah, give it a toss. I really didn't. Okay, boys and girls, hope that helps. So as always, trade well, keep your risk managed, but above all, don't let Winky have me wallet. See you all in the next one.